Hello and welcome, and thank you for joining us on Business Incorporated. I'm Chimezi Obi Iwago. Coming up on the show today, IMF says global cooperation to synchronize monetary policy is needed to curb the impact of COVID-19. And Ghana set to launch universal QR code to accelerate pace for cashlight society. And South Africa's ailing Eskom says power cuts to last indefinitely. We start off the show with the markets, and major markets here in Africa. We're all in the negative territory at intraday, with South Africa's JSE index taking the heaviest hit by 6.41% down. Next in the trail of losses is the NSE index, which was down by 3.29%. The EGX 30 in Egypt was down marginally by 0.05% at intraday, while Kenya closed positive on Wednesday. And Gulf stocks plunged at intraday, joining a sell-off in global equities after the United States suspended travel from Europe and the World Health Organization declaring the coronavirus outbreak now a pandemic. In the UAE, Dubai's index shaved off 9.96% as banking stocks suffered heavy losses, while the Abu Dhabi index was down 7.40%, with market heavyweight First Abu Dhabi Bank shedding 8.4%. The Qatari index fell 4.45% after two straight sessions of gains, with all of its constituents trading in the red. Saudi Arabia stock index declined 2.87%, dragged by a 5.5% slump in ROG Bank. And the European markets plunged this morning as investors reacted to President Donald Trump's decision to impose restrictions on travel to the U.S. from some countries in Europe. The Pan-European Stock 600 dropped 6.4% in early trade, with travel and leisure stocks plummeting 9.3%. Let's get more from my colleague there in Frankfurt Stock Exchange, Chelsea Julani. Hello, Chelsea. Good afternoon. European markets are tumbling again after the U.S. announced a ban on travel from Europe. What are investors in Frankfurt saying about how this could impact the economy?
Well, the talk of today is really about recession. The European economy is already under a lot of pressure because of coronavirus, the disruptions in supply chains in China, the disruptions in sales in China have already put the industry under a lot of pressure. Now they're facing disruptions in Italy, and this is really just adding much more fuel to the fire at this point. The U.S. and the U.S. and the EU do a lot of. They have a lot of visitors coming back and forth. This is going to impact Europeans trying to go to the U.S., which could obviously impact the tourism sector. But it's also likely going to discourage people from coming to Europe as well for the time being. And this is really coming obviously at a bad time. We've already seen today Germany's largest, or one of Germany's biggest think tanks come out and forecast a recession for Germany for the full year. And that's likely going to be mirrored in other economic forecasts. So it's really a grim outlook for the European economy, and that's why we're seeing such a dramatic sell-off in stocks today.
And what could this travel ban mean for the airline industry?
It's going to be a big blow to the airline industry. As I've said, there have already been a lot of disruptions in travel throughout the world because of coronavirus. And this is just a really important route for a lot of European airlines and American airlines. There are about 500 flights a day between the US and Europe. If you extrapolate that over the 30-day period, that's going to be maybe around 15,000 flights. So the cancellation and the reduction in flights is going to put a lot of pressure onto airlines that are already reeling from the coronavirus. The Global Airline Industry Trade Group, IATA, has forecast that this could cost the industry about $100 billion this year. And that's going to really sort of identify the weak links in the airline industry. Some airlines may not be able to survive this. The sell-offs we've seen in stocks, the number of flights they're having to cancel, this could put a lot of airlines out of business.
European Central Bank, of course, is meeting this afternoon. What are investors expecting to hear?
Investors do expect the ECB to introduce some sort of stimulus. What that stimulus is going to be is a little bit up in the air. It could be more cuts to interest rates, which are already in negative territory. It could be more bond buying. But there's also a lot of skepticism coming into this meeting because the ECB has already sort of pushed monetary policy to its limits. Even before coronavirus, there was a lot of concern that the ECB had run out of firepower. So even if the central bank does take action today, I think investors don't really believe that that's going to be enough to really offset the threat of coronavirus here.
Thank you, Chelsea. We'll keep our ears open to see what the European Central Bank will, of course, come up with. Thank you for your time.